All right, today we're going to talk about the incredible comeback story of an enterprise automation company called UiPath. It's a story all about serious financial discipline, some really cutting-edge AI, and a potential disconnect in the market that has a lot of people talking. So let's just jump right in with the number that proves it. So let's just start with this one. Kind of staggering number, 933%. That's the year-over-year explosion in UiPath's non-GAAP operating income for the second quarter. Now, a jump that big, that's not just a good quarter. That tells you something fundamental. The entire engine of the company has changed. And that leads us to the big question, right? How on earth does a company go from burning cash to posting numbers like that? I can tell you, this was not a lucky break. It was a very deliberate, multi-year effort. So let's break down exactly how they pulled this off. First things first, the financial fix. You see, before UiPath could even think about all the cool futuristic AI stuff, it had to get its own house in order. This was all about building a totally stable foundation to launch its next big phase of growth. And the speed of this turnaround is pretty remarkable. I mean, look at this. In 2024, the company was in the hole, running a $50 million operational deficit. Just 1 year later, boom, flipped to a $42 million profit. And by the middle of 2026, that became $62 million in operating income. That's a massive swing of over $100 million bucks, from deep in the red to solidly in the black, in just about 2 years. So what was the secret sauce here? Well, it wasn't some kind of magic trick. It was just good old-fashioned operational discipline. The company got really serious about controlling its spending and becoming ruthlessly efficient. And you can see their success right here in this chart. They went after their administrative costs. Things like sales and marketing overhead. Back in 2023, those costs were eating up more than 22% of their revenue. By 2025, they had sliced that number almost in half, down to just over 11%. And the best part? They did all this while keeping their gross margins strong. But look, this wasn't just about cutting expenses. The core business itself is incredibly healthy. They're pulling in over $1.7 billion in recurring revenue, and their net retention rate is 108%. That metric is absolutely crucial. It means their existing customers aren't just sticking around, they're actually spending 8% more money with them every single year. You top that off with over $1.5 billion in cash, and you've got a rock-solid foundation for whatever comes next. Okay, so with its financial house finally in order, UiPath could pour some serious fuel on its real growth engine, artificial intelligence. And this, right here, is where the story goes from being a simple turnaround to a complete transformation. The key to their whole strategy is this idea called agentic automation. Now, to put it simply, these are not the clunky software bots you might be thinking of, the ones that just follow a rigid script. No, these are AI-powered agents that can actually see what's going on, make decisions, and adapt on the fly to get really complex jobs done. And this isn't just some theory they're cooking up in a lab. It's already out there making a real difference. For example, working with Deloitte, they helped clean up these massive, complicated enterprise systems, getting to what they call a 93% clean core. Think of it like decluttering a messy digital house, which is a huge deal for making a system faster and easier to manage. And with HCL Tech, they're scaling these same AI solutions for other huge global companies. So what do you have? You have a newly profitable company with some seriously cutting-edge AI. And this combination is what leads us to the core argument of our source material, that UiPath might just be an undervalued leader, and the market hasn't quite caught up to that fact yet. And when you look at the valuation gap, it's pretty stark. Similar AI software companies are trading at a revenue multiple of somewhere between 8 and 12. But UiPath, despite all its profitability and AI growth, it's sitting at a multiple of just 5. The market is basically valuing it at nearly half the price of its peers. I mean, the source article doesn't mince words. It says it flat out. Path, that's their stock ticker, is undervalued compared to its peers. The whole argument is that the market is still seeing it as an older automation company, not the AI-powered profit machine that it's actually become. And don't get it twisted, this isn't some new kid on the block. UiPath is an absolute powerhouse. They've been named a leader in their field by the industry experts at Gartner for 7 straight years. That just goes to show you how deep their expertise is, and how dominant they've been in this market for a long time. Okay, but of course, no story is complete without looking at what's coming next. What are the potential bumps in the road, and what are the rewards if they can navigate them successfully?
So the biggest challenge, the elephant in the room, is obviously competition. You've got tech giants like Microsoft and Google circling. So what's UiPath's defense? Well, the source argues it's their unique agentic AI layer and their super flexible API-first platform, which can plug into a company's existing systems way more easily than some of the all-or-nothing solutions from the bigger guys.
And you can tell UiPath is feeling pretty confident about their chances. This number here, this is their own forecast for annual recurring revenue by the beginning of 2026. They're projecting growth to nearly $1.84 billion. That tells you they believe this momentum isn't just sustainable, it's actually accelerating. Which really leaves us with one final crucial question. UiPath has pulled off a brilliant financial turnaround, and they are a leader in AI automation. We've seen the numbers, we've seen the tech. So the only real question left is, will the market finally wake up and reward it? We'll be watching to find out. Thanks for joining us.